short covering and stuff like that. But I don't think it's a structural story, especially the large cap IT. We'd rather stick to the mid cap IT where we can do stock picking, which have specific business models.
Okay, so mid cap IT, but there is promise there. Mihir Vora seems to suggest, despite maybe in some cases you could argue that the valuations have become stiff now. I mean, persistent on the day of the results, I think was at 4,300, probably at 55, 56. Some of the others have moved up too. So that's an interesting one. Mihir, one question though, on defense, right? In some sense, this whole 5-6 days has brought out defense capabilities of India. And in a lot of cases, at least as per reports, completely indigenous defense, manufactured defense products used in the last 5 days and coming up trumps, right? So in some sense. So my question to you is, does this enhance the defense story in that a lot of talk was being done about how India will be able to export defense as well because of the size. Now there is proven capability and therefore maybe the export revenue for select defense companies might actually go higher.
Absolutely, that can be the situation. I think the constraint, especially for the PSUs, would probably be manufacturing capacity rather than demand going forward. So I see a lot of action happening there. I mean, you can't have a bigger proof of concept than this, frankly. So to that extent, I think we've been catapulted suddenly into the limelight about our domestic, indigenous technologies and how well we are able to integrate multiple systems, complicated systems, not only the local systems, but integrate them with the global systems. So I think it's a huge fillip for the Indian defense sector as far as proof of concept is concerned. And I think the private sector as well as the public sector companies should come into the limelight and should do extremely well as far as, getting orders from the global countries is concerned.
Favorites right now, Mihir, in terms of sectors and themes. A few days ago, we were talking about everything domestic focused because, to hedge your bets against external headwinds. Is that view also changing?
No, I think India's relative position has only improved versus the rest of the world.
Yeah.
So we continue to believe that India will grow faster than most of the developed and emerging market countries in the world. So this tag of, fastest growing large economy in the world has only gotten stronger, I would say, because of this. And as I said, we just need to focus on our domestic execution, and I think the money will come in a big way for India.
Okay, focus on domestic execution is the key point over there. Thank you so much, Mihir, for speaking with us. Always a pleasure. Mihir Vora there of Trust Mutual Fund. All right, we're speaking with Aarti Industries just in a bit. The chemical company has posted a strong quarter. Net profits have beaten estimates, and it's reflected in the action we're seeing today as well. We will speak to the CEO and Executive Director, Suyog Kotecha, in just a bit. But before that, let me get my colleague Varsha to get us the highlights of the numbers.
Well, thank you for that. So, a company did post good set of numbers. Net profit did beat estimates. The revenue growth that you're seeing was led by higher volume across the segment. So, to speak on the volume numbers, if you see non-energy business volume grew 14% quarter on quarter, while energy business volume were up 21% quarter on quarter. But pricing across the value chain remain under pressure. Demand remains firm across most end user segments, but the agrochemical sector remains soft for the company. They have maintained their FY28 EBITDA guidance of 1800 to 2200 crore. On the JV updates, both their JVs, UPL, the JV with UPL and Aarti Industries is progressing well, and their JV with RE Sustainability, the technology finalization is expected or targeted in Q1 FY26, and the resource recovery capacity when it comes to JV with RE Sustainability, the resource recovery capacity stands at around 500 tons per annum and is targeted by 2030. Just on the con call highlights, they are targeting EBITDA range of 1800 to 2200 in next 3 years. Now the important point would be what they are expecting when it comes to FY26, because that's one year that investor will have focus on. The pricing challenges persist across product chains, especially in agrochemical, and the operating leverage and cost optimization initiative will actually drive EBITDA for the next 3 years, and the capex for FY26 is estimated to around 1000 crores.
Okay. Thank you so much for that. Suyog Kotecha joins us now. He's CEO and Executive Director at Aarti Industries. Mr. Kotecha, thank you so much for your time with us today. Let's just talk about some of the metrics that have looked good and some which haven't. Of course, net profit is a beat on estimates, but you're seeing a downtick there. So is the margins. Is this the agri-chemical business which is putting in pressure?
Well, I think if you look at the numbers from, I think two lenses to look at it, quarter on quarter versus year on year. Of course, quarter on quarter, if you look at second to third and third to fourth quarter, has been improvement on all metrics, including net profit, including EBITDA. On year, definitely, the last year, previous financial year, fourth quarter was very, very strong. So compared to that, you will see some amount of downtick, especially when it comes to net profit. From an overall business point of view, demand remains firm. Even in ag, I think we are starting to see very good demand recovery coming across the board. And that trend is expected to continue. But as some of your previous speakers were highlighting, I think the pressure on the margin persists. We've practically bottomed out in terms of margin, so we don't see much downfall from here on the margin front. But the recovery is expected to take time.
What is the outlook on the margin recovery and the time frame that you're thinking of?
Right now, I think if you take our next 12-month outlook, I think we are mostly budgeting based on volume-led growth. We have not budgeted yet margin recovery when it comes to next 6 to 12 months kind of time frame. We think given the extent of overcapacity in China and given the uncertainty driven by both geopolitics as well as some of the tariff-related issues, we are thinking that the margin recovery is potentially a few quarters away.
Suyog, hi. Good morning, Neeraj here. The last time that we spoke, I believe you had mentioned that it was difficult to predict what will happen in the next 12 months. Does the situation still stay as fluid?
Well, I think trends have started to emerge, but we don't
Positive?
know how the global positive so far, right? I think in the first quarter, for example, based on the US tariffs, there are certain value chains we have starting to see sort of decent amount of pickup on volumes from India to US. Similarly, demand across end markets, we see stabilization and at the same time growth as well, right? I think the only one trend, which is the margins at this point in time, still remains potentially at sort of kind of bottoming out kind of levels. And the recovery there is not visible in the immediate time frame. And as the US tariff situation is expected to also get further clearer in the next 3 to 4 months time frame, that will also give us much better visibility from this year's performance point of view.
Very interesting. But so if margins don't go down further from here, let's say there could be a recovery, maybe 6 quarters, maybe 4 quarters, let's say. But if they don't come off from this 13.5 number, do you reckon FY26 could be a year of revenue growth with maybe stable or improving margins, as the case may be, and therefore maybe better bottom line and top line growth at the very least?
Yes, I think so. FY26, the way we are looking at it is sort of volume-led growth.
Yeah, exactly. Volume-led growth.
And volume-led growth at a consistent margins compared to what we saw in the last 6 to 9 months kind of time frame. That's how we are planning for the year. And of course, we remain in the market. If there's opportunity to capture the margin uptrend, then we will do that. But right now, your characterization is right. We are looking at it from a volume-led growth year point of view.
But is it difficult to, let's say, give out a bare minimum volume growth number that you could do? Is the situation that fluid that you maybe can't?
No, I think right now we are budgeting for a double-digit volume growth.
But right? That's from 10 to 99, Suyog. So
of course, mid-teens is what we delivered last year, right? And this will be somewhere closer to that is our sense at this point in time. So, and if you look at our capacity utilization number across value chains, in most value chains we do have surplus capacity available. So that gives us confidence that if we are aggressive in the market, we can not only retain but grow our market share in many of these value chains. And that's what sort of gives us confidence to give volume guidance of double-digit kind of growth.
Let's take a look at what the outlook is on revenue and EBITDA as well. Where do you think that that kind of volume is going to come in from? You spoke about the overcapacity in China. Do those pressures continue in this financial year?
I think that pressure continues, and especially now with US tariffs announced, chemical is an industry where there are multiple steps within the value chain. As the import points in US get pressurized from a final product point of view, I think Chinese will be also forced to reroute not only finished product but also intermediates. And which is where industry has been highlighting to government potential concerns of dumping of intermediates from China to India. So I would say that the overcapacity situation in China is not getting resolved. That pressure will continue, but we have also learned to operate in that environment now for almost last 12 to 18 months kind of time frame. So we know how to handle that situation at this point in time. If you look at, earlier part of your question was, growth for this in sort of next 3 years. I think we have been very clear in terms of where we want to go in a 3 years time frame. And broadly, there are three buckets of it, right? The cost optimization expected to deliver 150 to 200 odd crores, the volume and margin ramp up somewhere in the range of 350 to 550 crores, and the capex led growth around 350 to 500 odd crores. And all of those initiatives are on track.
Is there, so that was the 3 year outlook which you mentioned in the call as well. Is there anything more specific you can give us for this year? Is there enough visibility there?
No, so I think we are not giving yearly guidance at this point in time. We're giving 3 yearly guidance, but what we are giving clarity on is which of these initiatives are getting completed and how are they progressing, right? So most of the cost-led initiatives will get completed during this year. And the impact of that partially should be visible within this year, as well as the full impact should be visible in the next financial year. And I think that should give us enough clarity in terms of how the journey from 1,000 odd crores to the 3 year guidance will happen.
Yeah. So, now I would urge you, my final question, and just maybe remove the hat of the CEO and ED of Aarti to somebody who's looking at the industry and a lot of moving parts. You yourself having a lot of products, plus there is China, plus European demand, so on and so forth, etc. What is the most predictable, to your mind, what is the most predictable trend in any set of products that you can forecast right now? You may well go wrong, Stuyo, because it's a very difficult thing, but your best guess currently for the next 12 months, 18 months, 24 months?
So I think there are a few trends which are very clear. I think wherever we have end-to-end value chains in the country and we are able to go to sort of N-1, closer to finished products or closer to products which are consumed by certain end application segment, I think we should see positive trend of India exporting to Western markets. I think that much we can say with the confidence, given whatever has happened in the last few quarters. I think people do want, the people keep talking about China +1, but I think that's something which is visible at this point in time. I think the second thing that is also increasingly becoming clear is that the wave of capacity expansion that we saw in the China over the last 3-4 years, that has got moderated quite significantly, right? So we don't see the same extent of capex happening in China over the last 12 months, and that will get further moderated in next 2 to 3 years kind of time frame point of view. So as the global demand picks up, at some point in time, this overcapacity situation will get balanced out. And in that context, the margin profile should start looking much better compared to where it is today. And third is that even most of the Indian players, right, I think did invest quite a bit over the course of last 3-4 years. And they are also now in this capex realization kind of mode. So from a financial metric standpoint, especially from a balance sheet standpoint, I think we should see improving trend over the course of next 2 to 3 years.
So, Suyog, just one final question. Where the first part of your answer that you gave, closer to the end product, etc., what are those? What are those products? I mean, could you just tell us, because it's a difficult sector to understand otherwise.
See, for example, if you take ag, right? I think if you take ag, then export of technicals should see positive momentum from India to US, right? Because that's where US imports are happening as of now. Or if you take example of polymers, right? So wherever you are doing N-1 polymer intermediate or even polymer in some context, there you should see increasing exports happening from India to the Western markets.
Yeah, well, cross fingers for all of that. But wishing you all the best for the 3-year journey and also for maybe a positive surprise in FY26 itself. Suyog Kotecha, thank you so much for speaking to us today.
Thank you. Thank you for having me.
That's Aarti Industries, 2.5% up today after the results, but the market itself has done so well. But one of the surprise to me, as we said at the start of the trading day as well, is the and maybe a positive surprise, maybe the market tailwind is happening, is what's happening to pharma.
Yeah.
There are no large cracks. Sun Pharma is down 4, so it's recovered from the opening lows. And some of the others, Nifty Pharma is in fact in the green.
You know, this could also be a reflection of easier said than done.
Clearly that. Clearly that.
Because, Donald Trump coming and saying, and actually the intent is noble and it's good. High retail prices of drugs in the United States is a core issue.
Yeah.
But not everything can be solved with a magic wand and an executive order. So you say today that no matter what, this is how much we're going to charge, and then the rest of the world will see higher prices. How do those supply chains really matter? Maybe that is something that is being kept into mind. And then, which is why you're seeing very specific ones like a Sun Pharma, which are cracking. Even a Divi's, Glenmark, Biocon. It's not that there is no crack, but you're absolutely right, Neeraj, in relative
Reddy's,
terms.
4% higher, Tawanna.
But the numbers were good. We gave it a thumbs up this morning. That was our call. Numbers, was a beat on all levels, and they seem well poised for the rev limit, post-rev limit area as well. Perhaps why. But yeah, I can see the smile on Neeraj's face.
That's good to see.
That's what I think most of the market is feeling as
today.
well. Yeah. But what do? We give you the specific inputs after this. Stay tuned as we wrap up India Market Open. From Neeraj, me and the team that put the show together, thank you so much for watching. Stay tuned. We're right back with Ask Profit next.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest
Good morning and thanks so much for joining in. You're watching NDTV Profit. My name is Alex Matthew and this is Ask Profit, the show that gets you answers to all of your stock-related questions. And I'm sure that you've got quite a few of those questions that are lined up for us, not least of which what you should do if you booked your profits or you took money off the table at the end of last week and you're wondering whether to deploy at the current juncture because the markets are looking particularly good at the start today because of the cessation, and you can call it that at this juncture. Of course, it's been clarified that Operation Sindoor is still live and we will wait for clarification about when that does end. But as things stand right now, the equity markets are celebrating the semblance of return to normalcy, and you have the Nifty 50 that's very close to the high point of the day, up about 3% or so, and 24,700 has been hit on the charts. I was looking at when 25,000 was last hit, and that was in October of last year. And remember, the kind of drawdowns that you saw over the course of several months for the benchmark Nifty 50 started at the end of September and went on for 5 months straight. So it's looking good at this juncture. Broader markets are actually looking good as well. You have the mid-cap index that's up about 3.2% or so, and you have the small-cap index that's up about 3.7% or thereabouts. And it goes without saying, the market breadth very firmly tilted in favor of the advances. But there are a few stocks that you should watch out for. Let's first take a look at the contribution on the Nifty 50, and you have just about a couple of stocks in the red. Sun Pharmaceuticals on the back of the update from the US, the possibility of implication for pricing of generics in that market, that is having a bearing on Sun Pharma at this point, and it's losing quite a bit of ground, but it's not really moving the needle too much for the benchmark Nifty 50. ICICI Bank, which was down about 3% in trade on Friday and proved to be a little bit of a drag for the benchmark, is up there in terms of the contributors. HDFC Bank as well, Reliance Industries. So the big heavyweights are moving the needle quite substantially for the benchmark Nifty 50, which is up, as you can say, about 700 points or thereabouts at this juncture right now. But let's talk about a few stocks in the news. And you have Birla Corp, which arguably is the stock of the day. A very strong set of numbers for this company, and it's at upper circuit right now because you have a strong performance on the EBITDA front, and if anything, the PAT number was a little affected by a rise in the interest cost, and that's certainly something to watch out for. Navin Fluorine is just about flat at this point. It was up about 3% or 4% earlier on in the session, but it is given up those gains. Another strong set of numbers for this company. But I find interesting that ABB is up and about today, despite the fact that some might argue Q4 was not the best quarter for them. It's up about 4% or so. You have Dr. Reddy's Laboratories that is bucking the trend in the pharmaceutical space, and it's up about 3.8% or so. But the pharma pack as a whole is under pressure. Let's pull up, in fact, the constituents on the pharma index just to give you some perspective on what is doing what. It's changed quite dramatically from the start today, and quite a few stocks are moving higher, but the likes of Sun Pharma, Glenmark, Divi's, Lupin, losing a little bit of ground at this point. We're joined by Saurabh Jain, who's Equity Head Research at SMC Global Securities, as well as Brijesh Ayal, who's a Head of Technical and Derivatives Retail Research at IDBI Cap. Thanks so much, gentlemen, for taking the time. Pleasure having you, as always. I believe we've also got our first caller for the day. Okay, so let's first take WhatsApp while we get our callers in. And we've got Jagdish, who's writing in, Jagdish Madishetty, who's asking about Shipping Corporation of India, I believe, and he's bought at levels of 331, so elevated level. The stock is up about 5%, as is, I think, quite a raft of shares, but he's got 514 shares, and he's wondering what to do at this point. Should he book? I will come to you, Saurabh, on the fundamentals. What would you say about Shipping Corporation of India?
Hi, good morning. Thank you, Alice, for having me on the show. See, if you talk about the shipping corporation, the numbers in the last quarter was good. I mean, on the valuation side, it is quite comforting. I would put this stock into the value basket. I don't see further downside for the stocks, but if you hold for the long term, I think you may get your price. So my take would be a hold.
Okay, so hold is the view coming in on Shipping Corporation of India. Our next counter that we're talking about is Balaji Mines. Rajiv Jitendra from Qatar is writing in. He's bought 200 odd shares at 2304 a piece, sitting on a loss of around 2 lakh odd rupees right now. Wants to know as to what should be the next course of action for him. Should he sell, hold, or downward average? Brijesh, very good morning to you. I'll come to you on this one. What's the view like on charts for Balaji Mines?
Yeah, morning. So basically, the long-term charts are not that great. The stock has been correcting and it is making a lower low. So more or less, I believe this can slide a little bit further. Maybe the demands on what I can see right now is somewhere to the 1,000 mark. So if this person can hold this position, then it is advisable to hold. And sooner or later, whenever it comes close to 1,000, I would suggest to do some averaging and then review the trend, because on an immediate basis it looks weak and there can be a further downside in this counter.
Okay, so that's the view on Balaji Mines. Watch out for the levels that have been pointed out by Brijesh. But we've got our first caller of the day. We've got Ishwar calling us, I believe. Morning, Ishwar. Where are you calling from and how can we help you today?
Yeah, I am calling from Andhra Pradesh.
Okay, good morning.
Yeah, good morning, good morning.
Please go ahead.
I am holding Jyoti Lab shares of 3,000 shares at 370 rupees.
Okay.
So yeah, there are two results of these Jyoti Labs limited today. So what I need to do is that any negative results, if there is any negative results from Jyoti Labs limited from today.
Okay, so you want to know based on the fundamentals whether to hold on to Jyoti Labs or not, right?
Exactly, yeah.
Okay. All right, you bought at 370. When did you buy this, Ishwar?
Yeah, I recently bought yesterday, Friday or Thursday. Like
okay, all right. Saurabh, if you're watching Jyoti Labs and you're watching for the results, what would you look for and would you hold based on the fundamentals?
I think he should certainly wait for the results. It's a very good company. This time around, we have already have announcement of a good monsoon, and good monsoon generally boosts agrarian economy and the purchasing power, and these companies are surely to benefit. Among all the FMCG players, it is not that on the valuation side, it's not that pricier. I'm quoting it 7 times to book value. The point is that market is unhappy because in the last quarter the earnings were not that great. I mean, there was some kind of a degrowth both quarter on quarter and year on year. I think he should wait for the management commentary. The results are likely to be announced today only. I think wait for the management commentary and then take a call. As of now, it's a hold.
Hold is the view coming on Jyoti Labs. And Saurabh, you rightly mentioned the earnings are today, so we will wait and watch as to how the commentary comes out in terms of how rural and urban is panning out for Jyoti Labs as well, because they're more concentrated towards the rural markets. All right, the next question is from Pratap, who's writing in from Delhi. His question is on Birla Corporation. He's bought 4,000 odd shares at 890 a piece. The stock is locked in upper circuit today. He wants a fundamental view on this one. Saurabh, I'll come to you. Overall, great set of numbers in terms of earnings. It was a beat across segments in terms of what the street was expecting. Revenue was up 6%, EBITDA up 13%, net profit up 32%. Margins also have significantly improved. What's the view like? And fundamentally, from a longer period perspective, should the person continue to hold?
Long term, from the fundamental perspective, I think that, we have a constructive view on the infrastructure as far as cement sector. The numbers announced by the company was certainly surprised the street, because there was a 7% kind of a growth in the cement realization, and 1,000 per ton EBITDA was recorded by the company. Since the stock was saw some good selling in the recent months, that is why we are seeing good amount of buying because of the surprise in the earnings. From the long-term perspective, I think after the monsoon season, things will be great from the infrastructure activity in the second half, and thus we have call of hold on the Birla Corp.
Interesting. What was the name of the previous view? Vivek Pratap. Vivek, congratulations, because you're making 8 lakhs on your holding today itself, and 200 rupees of gains per share at 4,000 is your, and 4,000 is the number of shares. So 8 lakhs is what you're making today. Congratulations on your purchase. And we've got a next question from Ayush, who's writing in from New Delhi, and he's asking about Titagarh Wagons, which he's bought at levels of 1,200, and he's got a 6-month time frame. The stock is up and about in trade today. Very elevated levels, and some of these stocks, Brijesh, have taken a bit of a knock. It is making a comeback today. What would be the advice that you give here?
From the long-term perspective, we are bullish on this counter, and maybe somewhere close to 1,000 is what we are looking at. But the time frame may be from a year's perspective. The stock is looking good. It is making some kind of buying, and the buying structures can be seen. Volumes are picking up. It will take a little bit longer time, but then from the directional point of view, I think 1,000 is what we should be taking a target. So if we can hold for the 1,000, definitely yes. And if you want to add more at this level also, I think that should be, that view can be taken.
All right, so that's the view with regards to where charts are concerned for Titagarh. Our next caller, Sandeep, is calling in. Sandeep, a very good morning to you. How can we help you?
Good morning to you and all the panelists.
I have got Subex. I got 5,000 shares of Subex at the rate of 28 rupees.
Okay.
So I just wanted to know, should I hold or should I average it out?
Okay. Just wanted to understand, Sandeep, why Subex exactly? Did you research the company or you saw the charts?
I did a bit of both, and somehow the other it didn't materialize what I had thought, unfortunately.
Okay, interesting. Just to give a perspective to the viewers, it's a software product company which works in the space of digital trust. Brijesh, I'll quickly come to you on this particular counter, Subex. What are the charts indicating?
See, he's already taken a position. The stock is at 12.40, and what we can see is like there is some kind of base formation which is happening in the Subex. So I would advise him to hold. Let him take a stop loss at 10. So by any chance, if the stock slips below 10, then he needs to worry. So as long as the stock is trading about 10 level, there is always an opportunity, and he can bet for that 14-15 levels on the immediate upside. Volumes are picking up, so I think he may get some positive move in this stock. Hold with the stop loss of 10.
Hold with the stop loss of 10, and it's a very small company, as Mahima has pointed out, market capitalization of less than 1,000 crore. Best to do your research very carefully when you're entering stocks like this, because they can see volatility, not least of which generally the float is not very significant. So positive developments or negative developments can lead to very sharp moves on either side. We've got Babu who's asking a question, writing in from Mysuru and asking about Jindal Worldwide. He's got 400 shares of the company at a price of 73.8, and he's wondering whether to hold or sell at this point. He's not really specified his time frame, but Saurabh, on the fundamentals, do you have coverage? Textile companies in focus?
Won't be able to give those.
Okay. Do you have enough information, Brijesh, to give us a view on the charts?
Yeah, so this Jindal Worldwide, there has been some buying, so it looks okay, like not too much of bullish, but then I think that positive momentum can be there. So maybe another close to 10 points, or from the level of 70 we can see 80, so that is a resistance zone. So as of now, I think 80, 82 can be seen on chart, so that opportunity is there.
That's the view with regards to Jindal Worldwide with respect to where charts are concerned, and around 7% of their overall revenue comes from the international business, so might probably go ahead and benefit from the UK FTA that has recently taken place. All right, the next question is from Bikram, who's writing in from Kolkata. He's holding Lakshmi Dental, 400 odd quantity, bought at 410 levels, and he's a long-term investor. Saurabh, I'll come to you on this one. A fairly recently listed company. What's the view like?
Won't be able to give any comment.
Okay, Brijesh, I'm not sure if you have enough data on the charts. If you have enough data on the charts, what are the charts indicating?
So, as you rightly said, there is a very less data. So, whatever the positions are there, I think the recent low of 313, that was a low which I can see. So, that should be the stop loss, and then keep a watch on it.
Okay. Let me ask a slightly different question. And Saurabh, if you are to play, and I know that dental is not really the first option that you consider when you look at healthcare and you look at hospitals and you look at some of the new listings as well in the space. But fundamentally, if you were to talk about the broader healthcare space, beyond pharmaceuticals, beyond API, all of these, what would you buy in the hospital space?
Maybe I think Rainbow Hospital or the Metro, or maybe in the diagnostic space, Thyrocare or Dr. Lal would be a better opportunity.
Got it. All right. Hopefully that gives you some perspective if you're looking to play the healthcare space. Of course, it has been watched very closely, and understandably, healthcare inflation is going up quite substantially in India. HDFC Bank has been in focus, and it's a stock that has gained quite considerably. It is up and about in trade today as much as 3.4%. If we can pull up the slightly longer term charts, in fact, let's look at the year-to-date performance of HDFC Bank, and it's been pretty good. If I remember correctly, there you go. So it's up as much as 10% this year, and from the bottom that it hit in, I think, end of Jan this year, it has moved up quite substantially. The question is from Ankit, who's writing in from Ahmedabad, and he's wondering whether to enter this counter for a period of at least 2 years. So therefore, because it's a long enough time frame, Saurabh, I will ask you, and you've seen quite a few earnings come through from the banking space. HDFC Bank, would that be your pick?
I mean, surely it is a bellwether and should be in your portfolio. And for the next 2 years, I would say rather the next 5-10 years, it should be a good. It should do work good in your portfolio. Considering the fact that the problems with the merger are behind us, and this time also in the earnings, the banks has positively surprised the street. I feel that 14 to 15% kind of a CAGR return you can expect from investment in this bank.
Okay, so that's the view with regards to where HDFC Bank stands. Our next question is from Kiran, who's writing in from Hyderabad. So the question is that monsoon is coming, and is this a good time to enter something like a Rashtriya fertilizer and chemical stock? It's a PSU stock. Brijesh, I'll come to you on this one. What are the charts indicating right now for the counter, and is this the right time to enter, or should the person wait?
Yeah, I believe this can be one of the opportunity and looks good on chart. Maybe we can talk of 20-25 points more in this count.
100, and he's in the green. He's saying that he's a long-term investor, but he's wondering whether he should book some profits at this point. Saurabh, on the fundamentals, what are the prospects?
I think if you look at the financials, I think there was a meager growth in the operational metrics. On the valuation front, it is quoting around 3 times to book value, which gives a bit comfort. Basically, it produces detergent, and the raw material cost, in my opinion, has come down because of the slide in the crude and the chemical prices. I feel he should wait for the quarterly numbers to come and management guidance. Till then, it is a hold.
Okay, so that's the view with regards to where Galaxy Surfactant stands. The next question is from Meenu, who's writing in from Kerala. Is this a right time to invest into Thyrocare is her question, and she's looking from a longer term perspective. Saurabh, any view on this one?
Yeah, I mean, we have a constructive view on the Thyrocare. I think the competition in this segment has abated, and in the last few quarters, we have seen a good amount of growth coming in for the players in the industry. Thyrocare is expanding smoothly in different geographies, and the margins are also improving. In my opinion, it is a hold.
Okay, all right. As an interesting question, and this is quite the question. Prakash from Chennai has recently bought BSE at a price of 3,800. Let's pull up the chart and see where it's trading right now. He's wondering whether he should book profits now and pay STCG, which is short-term capital gains tax, or should he hold for the long term and pay LTCG? Is it worth holding with an eye on that tax gain? Honestly, you shouldn't be making your purchases and booking profits based on how much tax you're paying. That isn't really the right approach. But I will go across to Brijesh on the technicals just to give you some perspective on the key levels to watch out for. Brijesh, on the charts, BSE.
So basically, this has been one of the outperformers, and recently we saw a very strong move in this counter from the level of 6,000 in the recent trade, almost 1,000 points up. So the structure is positive, and he's already making a profit. So in a situation like this, it is always advisable to take some profit and protect its capital. So I would suggest to book some partial profit booking should be done, and the momentum should be right on. So on the way up, I think 7,500, 7,800. That's the monthly outlook view. So I think that can be seen in BSE. But having said this, partial profit booking is also advisable.
Okay, partial profit booking is advisable on BSE where charts are concerned, is the view coming in from Brijesh. The next question is on JP Power, that is your Jayaprakash Power. Vikram is holding around 12,400 odd shares, bought an average price of 14.8. He wants to have a technical view on this particular counter. Brijesh, he's sitting on a loss of around 8,000 odd rupees right now. What's the view like where charts are concerned? Because it's a significant quantity that he's invested in.
he can bet for more 2 rupees on the higher side because nearer 16 and 16 and a half, there is a good amount of supply is there, which is also supported by the 200 moving average. So I think the level of 16, 16 and a half will see some good amount of selling pressure. So I think even if it makes one point in that particular stock after its cost, I think he should take the profits and stay away.
Okay. All right. So that's the view on JP. Let's take a question on. Okay, we've got which share is Hariom is not specified which share. Hariom, you should tell us which share you bought at levels of 533. There are several shares that are around that price, so you'll have to tell us which stock you're talking about. And Lata has got a question. It's a pretty open-ended question, but it's an interesting one. She points out, she's writing first of all from Kolkata, and she's asking Saurabh that she's a beginner and she wants to buy a few stocks right now, and I think that if you have a long enough time frame, it's a great idea to buy a handful of stocks, but probably not just one. So if you were to talk about 4 or 5 stocks that you can start your portfolio with, and of course if you're just about starting out, maybe you should consider investing in the index, just to give you a sense of how the equity markets function. And the Nifty 50, Nifty Next 50 is a great start for you to do. But Saurabh, if you were to buy 5 stocks, which would those be right now?
He can anyway invest in bank Bs or Nifty Bs, but if he wants to invest in 4 or 5 stocks, I'll give a diversified portfolio. Maybe in the hotel space, he can invest in the Lemon Tree Hotel. In the banking space, he can invest in the ICICI Bank. In the capital goods space, he can invest in the companies like KEC or maybe Kalpataru. In the fertilizer space, she can maybe invest into the company like Chambal Fertilizer or Paradeep Phosphates. And maybe she can also venture into the textile space like Wortman Textile.
Okay. Our next question is from Aarti, who's writing in from Chennai. He's bought 150 odd shares of Ramakrishna Forging at 691 a week ago, and the intention to continue to hold, and with an intention to continue to hold it from a longer term perspective. Should I hold or sell now to minimize my losses? Is this question. Will the stock recover? Saurabh, what are the fundamentals indicating?
I think it is a very good company. I think there is also some kind of a disappointment in the last earnings season. Normally, this company generally, surprises the street. But overall, the sector from the long-term perspective, the sector in the company looks good to me. I won't advise to book losses. I would rather suggest to hold.
Would suggest to hold, and this was RK Ramakrishna Forgings. Okay, got it. We've got Satyan who's asking a question on Zaggle Prepaid. If I'm not mistaken, the stock is going to, or the company is going to post its results today. I'm not sure. I think I'll pull that out. There's quite a list of companies that are going to post their numbers today. Stock is up about 9% or thereabouts, and he's looking for a view on the charts, I believe, whether it should be bought right now. The stock is up and about in trade today, 9% or thereabouts. Brijesh, on the charts, would you venture out and buy this right now?
Yeah, no, not exactly. I would not be taking any buy trade, but since it is taken a position, the level of 370 is a resistance zone. If that level is taken out, then he can play for another 30-40 points. But then taking a fresh positions, I will not be very keen on. It's a downtrend kind of a stock. Sideways consolidation is what going on. I'm not very confident whether this consolidation breakout will follow. Results are there. 370 is the resistance zone. If by any chance, if that level is taken out, then he can play till 400. So, but no advice on taking any fresh longs. If somebody is having a position, just hold on.
So that's the view with regards to where Zaggle stands, and as Alex rightly mentioned, Zaggle is expected to post its earnings today, so we'll wait and watch as to how the earnings fare for the counter. All right, the next question is from Vivek Jain, who's writing in from Kolhapur. He's holding 2,219 shares of Mishtan Foods at a price of 23 odd rupees. And wants a view on this particular counter. Brijesh, I'll come to you on this one. It's a fairly small company, 500 crore market cap company. In terms of the charts, what do you think the charts are indicating? Should he continue to hold? He's been holding this since past 2 years now.
We are talking about Manali Petro, right?
No, Mishtan Foods.
I think he's also asking about Manali Petro.
Yeah, but
we can take a view on Manali Petro then,
yeah,
if he's not got a view. Yeah. Brijesh, on Manali Petro, what's the view?
Yeah, so specifically on Manali Petro, I think the view is pretty strong. The stock is forming a base formation. So sooner or later, there can be a breakout. The trigger will come once the 60 level is taken out. But I'm confident that it may take a little longer time, but 60 will be taken out and gradually it should approach 70. So it's a hold, and somebody wants to add fresh longs can also take that call. So view is positive.
Okay, and any quick view on Mishtan Foods? The stock is locked in upper circuit today.
Okay. Not exactly. I think this will see some resistance. If somebody is having a position, I think profit booking is advisable.
It's a penny stock at this point, so may not be able to give you a view on that one. Guys, be very, very careful when you're buying stocks that are this value. Of course, you can make outsized gains, as some of you have done with stocks like Suzlon. This is something that has been a turnaround story, but understand that they're not as common as you would think, and you can get it wrong more often than not. Saurabh, Brijesh, do stay with us. We've got to take a very quick break. Viewers will be back on the other side to take more of your questions, so do stay tuned.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
All right, welcome back. You're watching Ask Profit, and it is time to invite or introduce Ajit Mishra, who's Senior Vice President Research at Religare Broking. Brijesh has left us, and thank you, Brijesh, as always, for taking the time. Ajit, good morning to you. I'll come to you in just a bit. First, we've got a long-term question that's coming through from Ronak, who's writing in from Mumbai. Okay, so he's listed out a few stocks, but I'm going to pick one out of the three, and I'm picking at random. Guys, I'm going to have to restrict to one stock per viewer, or we won't be able to address as many questions as we can. Newland Laboratories is the name of the stock that I'm asking about, and he's already bought, I believe, at prices of 1,200. Saurabh, these CDMO players have of late caught the attention of a lot of investors. Would you suggest adding more to your position or holding on at this point? What's the view on the fundamentals?
If you look on the valuation side, it seems quite expensive, 11 times to book value. And if you look at the numbers, there was no growth or a bit degrowth was witnessed in the quarterly earnings. In my opinion, I think it is a bit expensive. I think wait for dips.
If you were to deploy in a CDMO player at this point, and you were positive on this pocket of pharmaceutical companies, which would it be?
As of now, nothing is coming to my mind.
Okay, all right. I do want to point out, of course, that you had Naveen Fluorine that set out today with gains of about 3% or thereabouts, but it has since then given up those gains, and rightly so. Some would argue that these stocks already have reflected in their pricing the improvement that was anticipated in the fourth quarter, and that has actually played out as well.
Absolutely. The next counter also that we're talking about is on the back of its earnings, right? It's Thermax. Pradeep Kumar from Hyderabad wants to invest around 2 lakh rupees in Thermax from a 3 to 5 year perspective, but he wants to know if this is the right time to make an entry or not. Ajit, I'll come to you on this one. In terms of earnings, overall revenue and margins were largely in line, but net profit was a miss in terms of its estimates. Revenue growth was led by the industrial products and chemical segments. The stock is not doing much in trade today. Do you think this is the right time to make an entry in Thermax or wait?
Yeah, good morning, Mahima. So, Mahima, yes, it seems like a good price because it's almost like 45-50% retracement from the record highs. The stock has been strongly maintaining above its major averages on the weekly charts around 3,000 levels for almost 2-3 months now. Volumes have dried up, so that indicates that sellers are also exhausted. So yes, he can consider accumulating in this range 3,000, 3,200 with a view of 2 to 3 years.
All right. So we've got a question from Abhineet, who's writing in from Bengaluru, and he's got 300 shares of Varun Beverages Limited, which he's bought at levels of 544, he says. He's incurring a bit of a loss, so the stock is bouncing back just a tad bit, up about 3% at this point. And he's wondering what to do. He's not really specified a time frame, so Ajit, I'll come back to you on this one. Varun Beverages, would you hold, and what are the key levels to watch out for, both on the downside as well as on the upside?
So, Alex, if you would see that the stock has been witnessing volatile swing for almost 2-3 months now, means from 580 to 420 and then again to the previous swing highs. As of now, it's trading below all its key averages. It's not a good sign, but yes, at the same time, due to the oversold position, we are seeing recovery. His buying price, coincides with the long-term averages around 540, 545 area. So if the view is short-term, I would recommend him maintaining a stop at 490 and use any recovery towards the long-term averages around 540 area, the buying price. He should review his position again.
So that's the view with regards to where Varun Beverages stand. Our next question is from Venkatesh, who's writing in from Chennai. He's holding Sonata Software, 53 odd shares, bought at 436 at an average price. He wants a long-term view on this particular counter from 2 to 3 years perspective. Should he accumulate or hold is his view? Saurabh, I'll come to you on this one. In terms of overall earnings for Sonata Software, there was a client ramp down which was seen, and there were delay in terms of the overall implementation of projects as well. What's the view like? Should he continue to hold or even accumulate more at this point of time?
In fact, even for the bigger companies, the same thing is happening. Discretionary spending is nowhere, and there has been a delay in terms of implementing the projects. So it's a relatively smaller company. Our view is a bit negative on the IT sector. We feel that even the bigger companies will grow at a slower pace, and the high growth IT companies will also see the similar will see the similar things. In my opinion, I think it is better to get out closer to your buy price.
Question on Bajaj Finance. It's an interesting one. I'm going to ask Mahima to try and pull up the X date if it's come through. But if I remember correctly, Saurabh, it is along with the split and the bonus, if you account for both of them, you will end up with 10 shares for every share held. That is at the maths that I remember. Maybe you will have a better recollection of it. But we've got Mahalakshmi, who's writing in from Hyderabad, who's bought at an average price of 8,219. And she's got 9 shares. She's wondering whether to exit right now or wait for the corporate action to take place. And what's your view on the fundamentals as well?
I think the corporate action generally favors in terms of 2-3 percentage points, because the stock price will get reduced and there will be more active trading activity. From the fundamental perspective, I think the company is putting up a good show. The numbers were improving in the last quarter earnings season. Also, the company surprised it positively. So, from the fundamental perspective, it is good to hold. But if your view seems to be a bit tactical, so in that sense, she can wait for the corporate action to pan out.
So the one thing that was not liked by the street though, Saurabh, with regard to Bajaj Finance Q4 is the outlook going forward? Seemingly the trajectory of growth that this company was used to will not take place anymore, but you're talking about a higher base. You're comfortable with that trajectory of growth that they've announced?
See, the management is quite good. I mean, the investors do have a good faith in the management. When the management is guided, I mean, then I think from the stock price perspective, it is quite evident that the street is happy with it.
Okay, so that's the overall view with regards to where Bajaj Finance stands. And as Alex rightly mentioned, the ratio will be 1:10, considering both the split as well as the bonus. All right, our next caller, Kalyan, is calling in from Chennai. Kalyan, a very good morning to you. How can we help you?
Yeah, I hold 13,000 shares of ONGC, which I bought at 154.
Okay.
I made quite a money, but should I hold it on, or what is the short for ONGC?
Okay, just wanted to understand, when did you buy these shares, because it's quite a significant quantity and you're sitting on a significant profit of 11 lakh rupees, and what was the purpose behind buying ONGC?
No, at that time I bought because it was a good share.
Okay.
But now I want to decide whether there are better opportunities.
Okay, so you want to exit the counter, is it?
I'm not. I want to evaluate, do I have a better exit option?
Okay, better exit options. All right. I'll quickly come to you, Saurabh, on this one. What's the view like on ONGC? Should he continue to hold at this point of time, or should he wait for further upside and then book his profits? He's sitting on a profit of 11 lakh rupees, by the way.
Yeah, in my opinion, he should book profits because the crude is anyway has come down and the outlook is not that great for the crude prices. And since the company is a producer of the crude, the company's profitability will be surely impacted. So my view is better to take money off the table.
Where would you deploy? So if you are taking money off the table and if you're taking it out of explorers or a crude sensitive stock upstream like ONGC, then where would you deploy it?
I think industrials, banking and hotels make sense. For example, Lemon Tree, L&T or ICICI banks make sense.
Okay, all right. So those three stocks you should watch out for, Kalyan. And I wish you luck, or I wish you good fortune, considering the kind of gains that you've made with ONGC and the patience that you've had with this stock. 13,000 shares being held through pretty tough times actually, and you've made your money. All right, John's got the next question. Biocon is the name of the counter that he's holding. He's bought 200 shares at 390 rupees and he's looking for advice for the long term. 390 is the buy price, 328. The stock has posted its numbers already. What did you make of the Q4 numbers, Saurabh, and would you hold for the long term?
In the long term, if you see in the last 10, 12 years, the stock has done nothing. So in my opinion, I think there is no point in chipping with the company. As far as pharma sector is concerned, I think the recent statement by the US government also weighs on the sentiments. So my take, it is better to take money off the table. I'll suggest move money to the banking or industrials.
Okay, all right. So that's the view on Biocon. Take money off the table. Ashish is calling us, and we've already taken a view on HDFC Bank, but I'm still going to take this question. Ashish, what would you like to know? Morning.
Good morning, sir. एक्चुअली HDFC बैंक में मैंने 335 क्वांटिटी ऑफ शेयर खरीदा है
जी,
जो 1962.30 एवरेज प्राइस है।
हाँ,
तो मेरा जो टारगेट है वो है 1978.90।
ओके।
तो मेरा जो क्वेश्चन है, एक्चुअली मैं बहुत दिन से ये होल्ड कर रहा हूँ। मैं पिछली बार भी फोन किया था इसके रिगार्डिंग।
हाँ,
तो ये जो टारगेट किया इस वीक में ये अचीव हो पाएगा?
ओके। और आपने ये शेयर कब खरीदा था?
पिछले मंथ शायद।
ओके, ऑल राइट। और ये 1978 का जो टारगेट आपने रखा है इस पे, आपने क्या देख के आपने टारगेट लगाया था?
एक्चुअली मैं इंट्राडे ले रहा था।
हाँ,
तो उधर पे थोड़ा मेरा मिस्टेक हो गया इंट्राडे में ट्रेड लेने के लिए।
हाँ,
तो मार्केट डाउन हो गया, मैंने ऊपर का ऑर्डर ब्लॉक से बाई कर लिया।
अंडरस्टूड।
जो मुझे सेल करना था।
अंडरस्टूड। ओके, तो आपको पता करना है कि इस हफ्ते में आपका 1978 हिट हो सकता है क्या? ठीक है, ओके। सो अजीत, यू हर्ड द क्वेश्चन, 3.5% today itself, and it's not too far away actually. So is that possible?
Yeah, Alex. So in fact, I can recall that he called us earlier also during the show, and the same target. Basically, the previous swing high, the record high, is something that he's eyeing as a target area. it's been almost 2 weeks now that he has been holding this position, but I would recommend always that when you are trading, if you're sure about your targets, like you are very particular about your targets, you should be clear about your stop losses as well. Means if you are eyeing, let's say 2-3% kind of a gains, then 1%, 1.5% should be your stop loss as well. Fortunately, the stock has come back strongly because the banking as a sector has been doing well. Now, at least he should maintain a stop loss at 1940 basis his upside potential. If he wants to exit, exactly at the price that he have mentioned. Otherwise, he can in fact review his position because the overall banking as a space looks upbeat to us. After Friday's decline, we are seeing noticeable recovery across the board. So, in fact, he can review his level and keep on trading his stop losses on every rise. As of now, 1940 should be a stop loss and he can hold his position.
Okay, continue to hold is the view coming in on chats. And Ajit, I must say you have a strong memory. All right, our next question is from Dilip, who's calling in from Hyderabad. Dilip, a very good morning to you. How can we help you?
Yeah, good morning. So I have a question regarding Gravita India.
Okay.
So I got 400 shares at the price of 1895 rupees.
Okay.
I'm looking for 6 months view on this.
Okay, so you want a technical view on this particular counter. Ajit, I'll take this up with you. In terms of the fundamentals, it was a steady quarter, in terms of Q4 FY25, but what are the charts indicating for the next 6 months? Should he continue to hold?
Yes, so in fact, Mahima has been a very steady performer. If you will see, on the multiple time frame, it's just that for almost 5-6 months now, it's been trading in a corrective phase. But the pace of decline has been gradual and it has rebounded very strongly once it tested the major supports around 1400 mark. I believe that the stock is set for the next leg of the move once we cross this barrier around 2000 mark. So since its view is 6 months, I would recommend maintaining a stop at 1600 now and 2600, 2800 as a positional target in next 3 to 6 months.
Right, I'm coming back to you, Ajit, on this next one. And Revati from Madanappalle in Andhra Pradesh is asking about IRFC. IRFC is the name of the stock that she's bought. She's bought at levels of 28 and she's wondering whether to book profits at this point because she's holding quite a substantial chunk. 1,970 is the number of shares that she has and she's wondering whether to take money off the table. What's the view?
So, Alex, we all know the kind of euphoric move that we saw in the railway stock in the past, and it's been almost 8-9 months now that we are seeing corrective pace. The good part is that at least the pace of decline has subsided. The stock has been hovering in a tight band. So, at least she should book partial profit because his buying price was very low, and she can think about expanding her portfolio also to the other sectors. So as of now, yes, partially profit can be booked. And once, let's say, we cross this 135, 140 barrier, we might again see a momentum towards 160 area.
Okay, so that's it with regards to RFC. Our next question is from Ramesh, who's writing from Hyderabad. And he wants to know whether this is the right time to enter into Sona BLW. Your quick view, Ajit, on this?
Sona, so I feel that we are at the immediate resistance. 520, 525 area is a very strong resistance for Sona Comstar. So at least wait for a decisive close for a day or two once we cross this barrier of 520. Then you can definitely consider because 500 in that case would be a stop loss and 560 would be your immediate target.
Much for that. It's time to shift focus back to earnings, and we've been getting you management commentary. This is an auto ancillary company that is in focus. Maderson is the name of the company we're talking about. Puneet joining in to speak to the management, also give you some perspective on the numbers. Puneet, how did they look?
Well, numbers were largely in line, Alex. Revenues grown by about 12%, coming at 2,509 crores, and this also included some cost from the greenfield as well. So revenue impact was there, and we saw EBITDA was down 7% and net profit was down 14%. That's largely because of the 3 new greenfield plants, and we've spoken to the management about it and what led to these costs and what's the outlook for these 3 plants as well. So let's go across to the management. We have Mahendra Chhabra who's joining in, the current MD of Maderson Wiring. Mr. Chhabra, a very good morning to you, sir. I wanted to start off first essentially with the question on margins, because that's been hit because of the greenfield facilities. In the presentation you mentioned that one of the facilities has come on stream. Is that the Pune plant? And I just wanted to understand, is this the first full quarter for the Pune plant, or was there any partial operations in this particular quarter from the same?
In the Pune plant, there are two projects. One has been implemented in Q2 of last year, and another one is in the Q4 of last year. So in the Q4 also, it has been partially. The full impact will come in this Q1, but the ramp up has happened in the Q4.
So I also want to understand, like in the similar quarter, in the previous quarters, where we'd seen a hit on margins because of this aspect as well. Could you just talk us through what's the hit on because of the startup cost in this particular quarter? What's the exact hit because of that in this particular quarter? Because is it from all the three plants that we've seen, or we've seen because the Pune plant has started to give revenue as well, that it's only the Pune plant and the costs associated with that?
When the greenfield starts, it happens in the phases. If you can see that in these three greenfield, you have to start, once the greenfield start, you have to do a lot of pilot runs also, and you have to hire the manpower upfront to start training them so that they can, when the SOP starts happening, at that time they can give the full productivity. You have to put all your machines, infrastructure, everything in advance so that when the SOP hits, you have all the infrastructure in place. So for the Pune plant, that has been started in Q1, which was earlier of the FY for 24-25. For the other two plants, it has been already started in Q4, Q3, Q4, and even in the Q1 also, because there is SOP is going to happen of one plant in Q1, another one in Q2 of FY26. So this is not something which happens only in a stipulated period of time. It happens over a spread of time when you are doing a lot of advance investment into these plants to when the productivity hits or when the SOP hits, at that time you can give it with the full productivity.
So you also mentioned about the revenue potential in the previous quarter. Could you just quantify it? You had mentioned 2,000 crores from these three plants. How much could be the revenue potential from these in FY26? Because the 2,000 was, of course, a cumulative time frame.
As I explained that these two plants, one is going to happen in Q1 of FY26, another one in Q2 of FY26. So you can see that 2,000 odd crores on annualized basis start giving the revenue in H2 onwards, backed by whatever the volumes customer has suggested, if they're going to produce those numbers.
Mr. Gehlot, let me just take a step back and look at FY25, because you had roughly 60% of your overall revenues come from passenger vehicles, roughly 13% from two-wheelers, 10% from commercial vehicles and trucks. So just want to understand, since you are one of the largest players in wiring harnesses for PVs, what would be your current market share essentially in this particular market, both for passenger vehicles as well as for two-wheelers, if you can quantify?
As a company, we don't work on the market share. Our belief is that we'll not lose any of the business because of the capability. We are backed by two of our parents. One is the Sumitomo Japan, and another side is SAMIL. Sumitomo is the world largest wiring harness manufacturer. Other side is SAMIL. So on the technology front, we are capable enough to handle any of the product which is going to happen. And other side, SAMIL, which is giving us backed by all the components, the wires, and the help on the white collars as well. So we don't follow only onto the share of business. Our focus remains on to work very closely with the customer. Don't lose any business because of the capability or any other issues. And if you see that focus only makes us that we are 60% our revenue goal comes from the passenger vehicle. And obviously passenger vehicle volumes are also in line to that the ratio comes as 60% of our revenue there.
Well, the question on market share was essentially because you mentioned in the presentation as well that you're already supplying to 9 out of the 10 companies that operate in India, which is the largest one in PVs. So revenue growth essentially will come only from volume growth as well as the industry growth, and that has been hampered in FY25 rather than any kind of new customer addition in passenger cars. So specifically, how should we see revenue growth for you in FY26?
See, if you compare of FY24-25 with the previous year, the passenger vehicle has grown by 5% around. And also, as a company, we are very much, ready to work on the customer volumes. Customer has suggested that we don't doubt their volumes at all. So we see whatever they are suggesting for FY26, we are completely ready for that. And that's what in line to that only our expansion has taken place in last financial year. So we are a future ready organization who is ready for the whatever the volume customer will suggest, we will take care for that.
And one last question, Mr. Gehlot, was on two-wheelers. That's 13% of your revenues for FY25. Now, we've seen that market outgrow and outpace the growth versus passenger cars in FY25. But the domestic share has been falling slightly for motorcycles. So just wanted to understand, since you mentioned that you don't give market share data, how should we look at that revenue growth? Is it expected to be faster compared to your traditional passenger vehicle wire and harness market?
See, there are two types of customers in two-wheeler. One is the established customer, which are there from last many decades in the country. And on the EV front, there are new customers which are coming up. So first I'll talk about the established customer. We are working with them from last 4 decades. And we are very happy to tell you that we are proud also to be part of their journey. And we are closely working with them, all the new models also. As you rightly said, that the growth has was very good in FY24-25, and so our revenues were also. For the EV, where the new generation customer is also coming up in the two-wheeler, we are working very closely with them. Few of them we are already metallized the product, and we are a part of their mass supplies also. And for few more, we are working on their proto, and I think in the future we'll be part of their journey as well.
Well, Mr. Gehlot, thanks so much for joining in, giving us a whole host of views for Maderson wiring in Q4 as well as FY26. But, Alex, largely the stock not reacting that much today, but that's largely because the growth has essentially just gone into funding and getting impacted by the newer plants. But, very interesting one nonetheless.
Especially because they're catering to forward-looking automotive businesses as well, which is an interesting one to track. Thanks so much, Puneet, for joining in. Keep that on your radar. An interesting chat, of course, with the management. Let's take our next question, and this is from Harsha, who points out that he's writing in from Virar, and he's clarifying that Virar is in Maharashtra. Harsha, we're aware. We're Mumbai folks, so we're quite aware of where Virar is. But you've got 250 shares of 600 at 670 of SJS, and you're wondering whether to buy for the long term or to hold at this juncture. Saurabh, view on SJS?
Won't be able to give.
Okay. Ajit, on the charts, SJS end up about 4.5% at 1,076. So he's in the green comfortably. So should he book or should he hold?
Alex, he should hold because this is the recent recovery. It's been among the stocks which recovered very strongly with volumes. All the major averages it has reclaimed in no time, and now we are seeing the first beige formation as well. So probably it can retest its previous swing highs close to around 1200, 1250 area. So still we have around decent room of 9 to 10% from the current levels. So with stop at 1000, if the view is short term, definitely he can hold for 1250 as a potential target.
Okay, all right, it's time to hit the rapid fire round, and this is where we throw as many questions as possible at our expert. Saurabh, Ajit, hope you're ready. The first question should be an easy one to answer. State Bank of India, Venkat wants to know, should he buy more at the current juncture? He's bought at levels of 785. Should he sell or buy more? Ajit, on the charts?
He should add more and maintain a stop at 780.
Okay, the next question is from Tamil Selvan, who's writing in from France. His question is whether to invest in Voltas or Blue Star. And 3 months is his perspective. Ajit, your view?
Voltas would be the bet because Blue Star we have already seen move 1150 closing stop loss.
Okay, Paradeep Phosphate is the name of the counter we're looking at next, and Niranjan wants to know, he's bought at levels of 80 rupees. Should he book profits or hold for another year? Ajit on the charts.
Hold, maintain a trailing stop at 130.
Okay, the next query is on Yes Bank. The person is holding 3,000 odd shares, bought at 31 a piece. Ajit, should he continue to hold?
Hold, now at least maintain stop at 18.
Okay, I'll give Ajit a break. Shriram Piston is the name of the counter. Shakuntala from Surat wants to know, she's bought at levels of 1,100. Should she add more at the current level of 2261? Saurabh on the fundamentals?
Hold, don't add.
Okay, Abhishek from Hyderabad has bought Mazagon Dock at IPO price and part stock split as well. 150 shares is his holding and 94 is his average price. Should he book profit? Saurabh, your view?
Hold.
Ami Organic or Aarti Industries, which is the better pick for the long term? Avdesh wants to know. I'm going to ask you again, Saurabh, but I think you said neither, right?
Aarti Industry.
Okay.
Okay, the next counter that we're talking about is Wellspun Living. Subramaniam from Chennai has bought 70 shares at an average price of 93. Should he accumulate more or sell now? Saurabh, your view?
Hold.
CESC, profit of 28%. Would you book at this juncture and switch to something else? Subramaniam wants to know. Ajit on the charts.
Hold, maintain a stop at 150 for position target of 185.
Okay. All right. Unfortunately, we've run out of time on this leg of Ask Profit. Thanks so much, Saurabh, as well as Ajit, for joining us and for answering all the questions you did. Viewers, we've tried to get all of your questions answered. Of course, that is practically impossible because there are so many of them. But hopefully the stocks that we've discussed today have benefited you in some way. There is, of course, Know Your Company lined up next. And Mahima will be back along with Harsh to take you through a company that you know quite well and you use very often. That is Swiggy. Do stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to this show, Know Your Company.
What we're going to try to get to today is Swiggy. The numbers of Q4 were out, but more than anything, believe that a deep down analysis of this company is much warranted. November 2024, the company listed at 390 rupees per share being the IPO price. I have Mahima with me, by the way. So Mahima Vachajani who will be helping us with this. But point being, 390 being the price at which the IPO price was for Swiggy, listed at around a 5% premium to that. Thereafter, the stock is down and currently sitting at 320 rupees a piece, despite it up being 2%. Today itself. Now, whether it's on the back of numbers or whether it's on the back of positivity, which in any case is reflecting in markets, is the question. But more than that, it's about understanding what Swiggy is about. Let me first start off by raising the questions which I want answered. Is competition the key risk to cash flow where Swiggy is concerned? Is this the one key piece? The second one is with regard to cash burn. How long and how much? This is the other key piece, because there is very little visibility or clarity with regard to how much of the cash burn will happen and for how long it will happen. And thereafter begs the question that if cash burn were to continue, would further fundraising actually be required? Is it worth investing in some of the new age tech companies is one of the other parameters that I'd want to understand. And competition definitely has better cash balances than a Swiggy has. And therefore, if cash is the only piece that's going to move the needle with regard to where Swiggy's business model is concerned, there is a risk. There is a larger risk compared to how competition is placed. It's also a fast evolving business environment. As the business environment changes nearly every other quarter, you are seeing Swiggy also adapt or change its business model. When you do that, there's just very little predictability as to what will come next. Forget about FY26. We are not sure about how maybe the next quarter or two will go. And if I were to value therefore Swiggy on the basis of some numbers put out in FY27 or FY28, how am I supposed to do that? Because there is just lack of visibility on what's going to play out in FY26 itself. And I'm not blaming Swiggy for that. I'm just breaking it up and trying to say that if the competition has the ability to pivot its business models quickly and has the cash, then Swiggy will also have to do so. And if Swiggy has to do so, then is there a risk where Swiggy is concerned? I'm not too concerned with regard to how competition is going to survive. I'm more concerned with how Swiggy is going to play everything that's panning out in this space. And therefore, if a further fundraise is required, whether they'll prefer debt, because right now they've just eliminated all debt from their balance sheet, and two, if a further fundraise is required, are they going to further dilute equity? In which case, if you're a shareholder, likely EPS will just get pushed in terms of both growth as well as visibility. So try and understand all of these. And before that, let's try and understand what Swiggy actually does and some background with regard to Swiggy. It's obviously one of the new age tech companies. I don't think it requires much introduction, but there will be some nuances which may be new. So let's try and get straight to it. Now, when I'm talking about just about the company purely, it was founded in 2014. It listed on exchanges in November of 2024. It's pioneered on-demand convenience platform. That's what it currently plays at, but it started off as a food delivery app, or rather it was one of the competitors or one of the first players within food delivery. Zomato actually entered after it with regard to food delivery. So what you want to see is that Swiggy does have the ability to be the first mover in terms of disruptive business models. There's no doubt about that. They did that with quick commerce as well. They did that with food delivery as well. But what about sustainability? Because on both of those, they were the number one player, and now they've slid to number 3 in quick commerce and number 2 in food delivery. And it's a duopoly. They continue to give up some amount of market share in food delivery as well. I mean, different reports will quantify it differently. but Zomato does have the lead in food delivery, and that's the bottom line with regard to market share. So something to know, and along with it, some concerns that I am voicing if you're an investor, shareholder, or a possible prospective investor. So something to look at. The other thing is they're going into events and services. Now they started off saying that we're going to build this comprehensive app, which is Swiggy. But what they've started to do is now they've started to also look at building out platforms from Swiggy. So they're not only sticking to that one single app agenda, which they started off saying that they will do. They are also pivoting from what they were saying maybe 2-3 quarters ago, which is why there could be uncertainty, but that's the other piece which they've started doing. Events and services. Now everyone's going into events. Zomato has picked up Paytm's events business. They're trying to drive events through that. Other services also has plenty of competition. So in each businesses, there's a lot of individual and bunched up competition. Individual competition may be in delivery, where you have a Zomato alone, but bunched up competition in things like events, in things like quick commerce. There's just too much competition on all the fronts that they are competing in. So something again to keep in mind. The other piece is there's some bit of inefficiency. There's higher operating costs where Instamart is concerned. This increases losses, gives a drag to cash flow as well. Company is expecting contribution margin break even at Q1 FY27. Earlier, the goal was Q3 FY26. There's an aggressive dark store expansion drive. This could well keep a lid with regard to how cash flows is concerned. And they've added around 1,021 odd dark stores in FY25. They continue to do this dark store expansion at a fairly healthy clip. What they're now planning to do is around 60 dark stores per quarter is what they're targeting, which roughly translates to around 250 odd dark stores every year. That's broadly the guidance that's coming through. And that's with regard to, again, quick commerce. Now, in terms of Swiggy versus Zomato, look at quick commerce in terms of the growth. This is Q4 growth that you are seeing. This is purely Q4. Kind of gives you a summary that neither are taking a very large lead in either of these. You're seeing Zomato slightly behind in food delivery on the YOY basis number, but nothing material. Even on quick commerce, they're largely even Steven. They're largely there. This is again Q4. We'll look at the larger numbers as well, try and break those down, but this is how it's playing out. Mahima, you want to kind of take over and try to give us a breakdown of how Swiggy is playing out.
Right, so in terms of cash burn also, like you rightly mentioned, the Swiggy discount has gone up to almost 24% this quarter, which is in fact even higher as compared to something like a DMart, which has been a disruptor in terms of giving a higher discount when it comes to sales of your FMCG products. In terms of the overall discount last quarter, that stood at around 20% versus that of around 22% for DMart. And this has almost doubled YOY basis, because Q4 FY24 the discount stood at around 12%, which has now gone to 24%. So the previous question as to how cash burn has been already taking place, right now Swiggy is sitting on a cash flow of around 3,300 odd basis. Will they be able to sustain going forward, considering the kind of competition that is already hitting them, and will they able to roll back the kind of discounts that they've already been giving and then be able to retain the customers or not, is the likely question. In terms of the overall income statement, the overall
Mahima,
revenues also...
Apologies, before we go to income statement, I want to quickly highlight some
key competitors.
Key competitors in every space, because that's important. Let's look at firstly the food delivery space. 43% market share Swiggy, around 57 odd % market share Zomato. Then you have Magic Pay, Eatio. Those are some of the smaller names, but broadly it's a duopoly where food delivery, core food delivery is concerned, and that's their core business. Let's now talk about Instamart. That is where competition is quite high. And let's pull out the competitors on that one. It's the quick commerce platform, operates currently in 120 cities. Those are just some of the competitors that are there. There is a Myntra now, which is starting to come through. A JioMart is coming in. Big Basket is coming in. Blinkit already has a substantial presence and a strong backing and a strong parentage with a strong backing. So all of those Blinkit has. Zepto is unlisted and therefore no pressure from public shareholders. And there's Flipkart Minutes. This is a highly competitive environment where competition, at least in the quick commerce segment, is concerned. Last off, let's talk about events. And there, events as well as other services, there you have something like an, so that's the ticket booking app. And there too, they have competition where ticket booking is concerned from a district, from a Book My Show and from a Paytm Insider. All of those compete for the same share and the same pie. And last off, then there are other services which also Swiggy is doing at this point. So there you go through Swiggy Ping, which does professional services. Now in the professional services space, you have an Urban Company, which is again large, and it only does this, and therefore it can afford to sustain some amount of burn more than others. Then you have Swiggy Snack. Swiggy Snack is the 10-minute food delivery, competes with Zepto Cafe and Bistro. So all of these have a decently large sized competition, some of them overlapping, but nonetheless they do have quite a bit of competition. Let's list down the parameters we look at before I go to Mahima. Income statement will be the first parameter, balance sheet, cash flow, shareholding. We'll thereafter look at street cred, street coverage. We look at valuations, it's an interesting one. And last off, we look at outlook as well, what to expect. And for that, we're looking at the business strategy at this point. What in terms of business strategy can we expect going forward, and what has played out as of now? Going forward is going to be tough to do. So more so, what has played out till now is what we'll focus on. But Mahima, start off with the income statement.
Right. So in terms of the income statement, the overall trajectory in terms of the all four metrics that we see, that is revenue, your EBITDA, your margins, as well as your profit or loss, the overall trend has been a little disappointing. Revenue, of course, on an increasing trend from around 2,400 odd crores, it's gone to 15,200 odd crores. But at the same time, when we see, when we look at the overall EBITDA metric, the overall losses in terms of EBITDA that has gone up from around 1,300 odd crores to almost 2,700 odd crores in FY25. Now, in terms of the management guidance, they did say earlier that they will achieve contribution EBITDA level break-even by December 2025, but that guidance has now been pushed to Q1 FY27. And in fact, a lot of brokerages and analysts have come out and said that they do not expect Swiggy to come in and give a break-even in terms of contribution at EBITDA levels by FY28. So that's with regards to where EBITDA stands. In terms of the overall net loss, they've widened significantly from FY21 around 1,600 odd crores to 3,100 odd crores in FY25. This is on account of the higher losses is also on account of higher dark store addition that they've given this particular quarter. Even in terms of the overall discounting, because the competition is rising, has gone significantly up, which is overall impacting the losses of the company. Even in terms of the overall margins, the margins have slightly come down from 50% to 34%, but it's still far away from turning into a positive EBITDA margin. So that's with regards to where the overall income statement stands, Harsh.
Okay, so that's where the income statement stands. Let's look at the balance sheet as well. And you want to start to see improvement where the income statement is concerned. You want to see improvement where margins is concerned. But the margin improvement hasn't been solid, especially on the food delivery side. I want to quickly highlight that the margin number came in at just 2.9%, which is lower than what Zomato has done at peak, obviously. But also you want to wait and watch as to how much this can go up by, and it's gone up by just about 40 bips on a sequential basis. You want to wait and watch how quickly can this go up. Well, currently we're not seeing a very strong inch up, so you want to wait and watch. They're continuing to incur costs on customer acquisition, which is the other key issue at this point. That's how the balance sheet stacks up. The debt is near zero and at this point, and therefore fairly okay from that perspective. But what you again want to see is how much of the cash bank balance in the balance sheet can cushion the business. That will hold the key. If cash reserves start to dry up or start to come under pressure, they will have to do a fundraise, whether they do it through a debt raise, whether they do it through an equity raise, and again dilute equity will again start to be a problem. But Mahima, so we've done balance sheet, we've done income statement, cash flow.
Right. So in terms of cash flow from operations, it's still time where Swiggy will convert that into a positive metric. Overall, the cash flow from operations stands at a negative 2,100 odd crores as FY25 stands. The overall net cash flow is a positive number, which stands at around 360 odd crores. But the interesting part in terms of cash flow is that their working capital days overall has gone up quite significantly. It's gone up to almost 15 days versus that of negative 20 odd days in FY24. Again, this is because they have increased their dark store addition quite significantly, and for them the overall inventory also goes up along with dark store additions. So that is kind of having an overall impact when it comes to cash flow from operations in terms of Swiggy. But the management has said that going forward in Q1 FY26, they will reduce the kind of aggression that they have taken in terms of dark store addition. So overall, in terms of cash flow improvement from Q1 FY26, if these dark stores, the overall average per store per order goes up, the overall cash flow from operations will also go up, considering that they will be going lesser in terms of dark store addition. So that's with regards to where the overall cash flow metric stands. How does the shareholding look, Harsh?
Yeah, that's again another big concern. On the 13th of May, you'll have 80% of Swiggy's shareholding lock-in, which is currently under lock-in expire. So you'll see some amount, I'm not saying too much, but you'll see some amount of more liquidity flow through in terms of stock. Some supply get released, which could keep the stock under pressure. Mind you, it's already been under quite a bit of pressure, but you want to see as to how that plays out on the stock price, and you'll start seeing it maybe in a day or two. So FIIs currently hold around 4.9 odd percent, just shy of 5. From the 7.8%, the DI holding is up to 9.3%. Kotak Emerging Opportunities Fund is one of those which holds and which has some stake where the DIs are concerned. And then you have around 86% public holding, but some of that is also chunky. So within that public shareholding, you have some amount of chunky holdings. I'll quickly try and elaborate. You have SVF LI, which is SoftBank, which holds around 7.5 odd percent. So you have some big investors also holding chunky quantums, which is sitting in the public shareholding. Something to keep your eye out on. But let's quickly look at street cred as well. And let me try and cover that, Mahima. In terms of how this has played out, stock is down around 25 odd percent since listing. It's down 50% from its all-time high of 617, and it's around 20 odd percent lower from its 390 rupees IPO price as well. So not looking good from an investor standpoint. Of course, that doesn't always mean it's bad, because from the listing price, while there was not much money seemingly left on the table, it was still at a sharp discount to Zomato's valuation, already listed valuation as well. I'm not talking about the IPO valuation. I'm talking about the at that point what was Zomato's valuation, and therefore we've given this a bit of a neutral, because while street cred in the near term has been extremely volatile, you still currently are sitting on just about a 20% odd of a loss if you are an IPO investor. Mahima.
Right. So in terms of the overall outlook also, there has been, an indecisive business strategy that Swiggy has overall adopted. In terms of the business diversification also, right now, we're seeing that they're trying to sail into too many boats. They're and these are costly but ambitious targets that they're aiming at. In terms of over diversification in different businesses, we're seeing that they're entering into Swiggy scenes. They have also bought in Ping, which is a professional services app. Snack is a 10-minute food delivery app. And of course, they're also moving in from their overall integrated app strategy to now building different apps for different businesses. So this is something to keep an eye on. In terms of valuations, as Harsh rightly mentioned, of course, because we are EBITDA negative right now, we have the price to sales to compare both of these counters. Slightly cheaper than where Zomato stands, of course, but Zomato right now overall on a net basis is EBITDA positive. Last quarter it did see losses, but overall slightly better in terms of where Swiggy is performing. And lastly, in terms of the overall analyst recommendations, also there are around 13 odd buys, 3 odd holds and 4 odd sells. So this is with respect to where valuations and what the analysts are expecting stands.
And why we're giving it a thumbs up also, Mahima, is that there is a 29% upside to the current market price of Swiggy. So when you're looking at what the average analyst is saying in terms of target price, the 12-month target price average as per Bloomberg estimates is 414 rupees per share. So you have some amount of upside from here is what analysts seem to be building in. But let's quickly move on. Listen in to a conversation we had with an analyst earlier. We had Shobhit Singhal, who's the research analyst at Anand Rathi Institutional Equities, who tracks Swiggy closely. And we spoke about some of the risks, especially the mounting losses, and what exactly investors should do with the counter at this point and how he's looking at valuations. Listen in to that conversation.
If you see the results, so it's so FD business remains stable, but if you see the execution gap is widening between the two QC platform, right? So Instamart continues to lag Blinkit in terms of growth and incremental unit economics. So if you see the current Q4 quarter numbers as well for Blinkit, so Blinkit reported around minus 1.9% kind of adjusted EBITDA margin. Even they have expanded around 300 dark stores in this quarter, similar to what Instamart did. But if you see the adjusted EBITDA margin of Instamart, it has widened from 14% last quarter to minus 18% now. And company has also now saying that the contribution break even for QC segment will be next 3 to 5 quarters. So we are factoring in our numbers from FY28 only, not from 27, the profitability of QC segment. So there is a risk remains in this QC segment because the competition intensity is also high.
Point taken. So you are saying that likely you're being conservative and you've pushed maybe, or you've given an additional year to Swiggy to actually deliver on that number. Is that understanding correct?
All right.
Okay. And is there a high level of uncertainty of Swiggy achieving that as well, just because of how quickly the business model is evolving? I want to close this point, and that's why I try to reiterate this.
We don't believe that there is a risk remains on that front because it's already it's been now. So they are also a third player in QC segment, right? And if you see their monthly transacting users and everything, even in their dark store, so they have now reached around 1,000. So we believe that they will be a number 3 player in this segment, and they can easily achieve profitability in this segment from second half of FY27 or from FY28 onwards.
Got it. Shobhit, sorry, go ahead with your point.
Yeah, so that downside risk remains low.
Okay. Shobhit, just wanted to drive home this entire point because couple of things that the management has said in their shareholders letter as well. They've said that now they will be burning less of cash. Their dark store guidance also, they've said that they'll be doing lesser dark stores Q1 FY26 onwards. All this pointing towards a more margin accretive model. But right now, competition is hitting hard. Zepto is burning cash. Zomato as well is burning cash, and both of them are sitting on higher cash as compared to where Swiggy is sitting in. Just wanted to understand that considering the guidance that the management has given, do you think that market share loss will take place Q1 FY26 onwards?
So if you see on the competitive intensity front, so Zepto was very aggressive till last quarter, but from Q4 onwards, they have also reduced their cash burn. So earlier they used to do around 15 crores of cash burn per quarter, but that has been reduced to around 1,000 to 1,200 because even they are they are also coming out with an IPO in next 6 to 8 months. So they need to show some improvement in their operating metrics as well before IPO. For Instamart, so Q4 was the peak of their investment in terms of dark stores, etc. But from Q1 onwards, we believe that the losses should taper down because what they are doing is that now they will concentrate on their existing cities because they have reached around 100 plus cities. And unlike food delivery, in which they are present in 700, 800 cities, in QC, they are not planning to enter beyond 100 currently. So they will go deep down into their existing markets.
But just to understand, just to understand, because overall, even in terms of monthly transacting users, they've not been able to cross that Blinkit mark. So do you think that this market share loss will continue for Swiggy Instamart?
So we are not saying that in QC they will gain any market share, but we are saying that they will continue to be the number 3 players. So first one obviously will be the Blinkit, second Zepto, and then Instamart, and then fifth player can be Flipkart Minutes or Amazon or Reliance Retail, etc. But the company will continue to be the number 3 player in the QC segment.
Okay, so that was a slice of the conversation we had with regard to Swiggy and Shobit's views coming through on that one. Let's look at how our KYC ratings stack up where Swiggy is concerned. The income statement, while growth is there, what you're not seeing is the consequence of that on profitability. Balance sheet, while it's okay, if cash burn were to continue, that's the key risk on the cash flow side as well. For the moment, we're not seeing an improving trajectory as substantial as the top line growth in the income statement. We're not seeing that on cash flow. Shareholding is a neutral because, of course, there's some amount of risk from the lock-in expiry that's about to come through, but you have some chunky shareholders as well within the company. Street cred is a neutral, largely on the back of the fact that your listing gains haven't come through, of course, but the stock has been extremely volatile, and therefore it's difficult to determine as to how that move has spooked the street. Street coverage is a thumbs up because there's very, very strong coverage, and the target price upside average is around 30%. Valuations are a neutral given that Zomato is definitely trading at a premium to Swiggy, and the business strategy at this point is just difficult to determine because everything is moving on a quarter-on-quarter basis in terms of how the business is evolving. So lots of uncertainty. That's the best we've been able to do with regard to Swiggy, 3.5 on 5. But with that, completely out of time on this edition of KYC. Stay tuned. More action on the other side.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of
those strikes across those 9 terror hubs left more than 100 terrorists killed, including high-value targets such as Yusuf Azhar, Abdul Malik Rauf and Mudassir Ahmed that were involved in the hijack of IC-814 and the Pulwama blast.
The difference here was that we had targeted the terrorists. The adversary now has targeted our civilians and the military infrastructure. So it had to be responded to.
Some of the airfields and dumps saw repeated attacks in waves from the air. All were thwarted.
Our aim was not to inflict casualties, but in case there have been, it is for them to count. Our job is to hit the target, not to count the body bags.
To my counterpart, highlighting these violations of the understanding between the DGMOs on the 10th of May and our firm and clear intent to respond to these fiercely and punitively.
This time, if Pakistan dare take any action, and Pakistan knows it, what we are going to do.
In a dramatic display of power and precision, India has struck a decisive blow to Pakistan through what is being hailed as perhaps one of the most expansive military operations undertaken by India against Pakistan in recent times. Codenamed Operation Sindoor, the tri-service mission was launched in response to the brutal Pahalgam terror attack on April 22nd, which claimed the lives of 26 tourists and a local. Over a span of 4 days, starting May 7th, the Indian Army forces executed precision strikes targeting terror camps in both Pakistan and Pakistan-occupied Kashmir. These operations resulted in the elimination of over 100 militants, including key figures involved in the IC-814 hijacking and the Pulwama attack. when Pakistan did not learn its lesson and retaliated by attacking Indian military bases and civilian areas, which, as we all know, were successfully intercepted by India, India too responded by attacking 11 of Pakistan's air bases. Needless to say, India has inflicted significant damage on Pakistan, which finally prompted them to reach out for a ceasefire. Pakistan is believed to have reached out to the United States for urgent intervention after its military bases and strategic assets were pounded by India. US officials were already in contact with both sides in anticipation of escalating tensions and directed the Pakistan DGMO to activate its direct line to the Indian Army and avoid any delay. On May 10th afternoon at 3:35 p.m., the DGMOs of both sides had spoken and a ceasefire was put in place by 5 p.m. the same evening. Initially, there were reports of violation, but subsequently it was a night of calm in the border areas. Remember, India has repeatedly emphasized Operation Sindoor was never about revenge. It's about redrawing the lines of tolerance which Pakistan has continued to violate through the years. For example, the Indus Water Treaty has now been linked to terror, and it has been conveyed by the government that the treaty would remain abolished despite the ceasefire. The government has also conveyed a firm message that this is going to be the new normal post Pahalgam, and there will be no business as usual. India has also exposed Pakistan as a terrorist hub globally and said that any future act of terror on Indian soil will be treated as an act of war. Now, while the military superiority has been established, war is more than just what military action entails. It's about psyops, it's about communication, it's about positioning. How has India fared there? To speak on this, I'm joined first in this special program by Harshvardhan Shringla, former Foreign Secretary. Ambassador Shringla, thank you so much for speaking with us on this very important topic, even as the fog of war and misinformation continues, because we live in an era of social media. And this is where India has to put its stance forth very, very clearly.
Absolutely. I think, we have made our position very clear in the wake of the attacks in Pahalgam on 22nd of April. Our very targeted, calibrated strikes on terrorist camps, I think, made a very telling point. What is very important is that our strikes were at the headquarters of the organizations that were directly responsible, not only for Pulwama, not only for Pahalgam, but also for Pulwama in 2019. And also, of course, if you go back, it is linked to the IC-814 incident. From that perspective, I think that the terrorists who have been involved with, cross-border attacks into not just Jammu and Kashmir, but other parts of India as well, have faced very just retribution in the form of our strikes under Op Sindoor. And if you see the sort of high-value terrorists who were casualties of that strike, I think we have proved that we can go to the heart of Pakistan-occupied Kashmir to strike at terrorist targets at will. And so whether it is the headquarters of the Lashkar-e-Toiba or the Jaish-e-Mohammed or other terrorist groups, I think we have been able to pinpoint them, target them, and effectively neutralize them. So that is the first objective and the first message, that terrorists, wherever they are, will face just retribution. That is what Prime Minister Modi had assured the people of India when he spoke to them in Patna, in a public rally in Patna. And I think we have fulfilled that assurance that we will get those terrorists and those responsible for those attacks, at Pahalgam. But subsequently also, and as part of that effort, there has not only been a response to Pakistani, I would say, attempts at targeting both our military infrastructure and civilian, targets in many parts of our country, right from the northern to the western borders of Pakistan. Our response has been very, very firm in that regard.
Yes.
We have demonstrated that we can hit targets deep inside Pakistan, in Khyber Pakhtunkhwa, in all parts of Pakistan with amazing accuracy. I think the sort of weaponry that we displayed on the 10th of May, when we hit 8 of their air bases and some radar sites, demonstrated that we had technology, we had the capabilities to penetrate Pakistani air defenses and hit them in different parts of their country with pinpointed accuracy. I think that is what really got them to intercede for a ceasefire. More importantly is the diplomatic and economic pressures that we have applied in Pakistan, including holding the Indus Water Treaty in abeyance. I think all of these are part of an effort designed not only to deter terrorism, but also to preempt future terrorist acts in India. And I think that message has gone across very clearly to Pakistan.
Has that message been evenly put across the globe as well, Ambassador Shringal? Let me come back to that point about social media, about Western media narratives. And, we saw a lot of Indian diplomatic seniors come out and speak to international channels. The Pakistanis did the same. How important does that narrative also become?
Your narrative is very critical in today's day and age, where it's a completely interlinked world. Whether it is business, whether it is economies, whether it's people-to-people contacts, or even governments, the influence of public opinion and perception, not only within your country, but on a global basis, is very important. And we need to get our communications and, our messaging across very clearly. And that is part of the effort. I think a number of our senior diplomats have gone, on various television channels and spoken out. I recall I'd done the same in 2019 in the wake of the Pulwama attack. And of course, I think it's important not only for, official representatives to be conveying the message, but essentially at all levels, at academic, intellectual levels, to be able to get this message across about our point of view and what exactly is our sort of policy framework under which we are operating. And I think this is critical when it comes to, conflict of this nature, where everything moves very fast. You need to be very, very proactive, and you need to be out there, conveying the big picture to audiences across the world. And I was fortunate because I did at least 3 or 4 interviews on BBC, Al Jazeera, and a number of international channels. And so did a lot of other people. But more of this is needed, I think, and we need to get our messaging across very quickly and very effectively.
Well, let's talk about the big T question. The announcement of the ceasefire coming from US President Trump, and then the whole, fog of war and parallel narratives about who called who has the upper hand, etc. How does India respond to all of this confusion and chaotic narrative that is being planned with clarity and determination?
No, I think a lot of information is now, coming across, and things are clearer than what they were on that particular day, on the 10th. It's clear that, the US had been engaged at various levels. I mean, you saw that Vice President J.D. Vance at one stage said that this is really an issue that has to be dealt with bilaterally. There's not much we can do. These countries have to resolve their issues between themselves. I did interpret that as having given us the right to self-defense and right to do what we needed to do vis-a-vis Pakistan. But later, I think, obviously, with our let us say, responding very firmly to Pakistan's escalation, we have to keep in mind that we have always said that our objective has always been a counterterrorism effort, right from the beginning. And even on the 7th, the night of 7th May, when we had the precision strikes on terrorist targets, after that, I'm told a message was sent to Pakistan through the DGMO channel to say that, look, we have hit at the terrorist infrastructure. We don't want to escalate it further. But from what we see, Pakistan, escalated it hugely, both on the night of 8th and the night of 9th May, by using high-speed missiles, drones, loitering munitions, fixed-wing aircraft against targets across India. On the 9th night, there were 26 locations that they attacked in this manner, but unsuccessfully, because our air defense is very effective. But our message has always been, and if you saw the press conference on the 9th evening, the Foreign Secretary also said, we are committed to peace. The onus on de-escalating lies with Pakistan. After all, they had escalated it severely to target not only civilians, but religious sites, schools, health centers, etc.
Yes.
And their escalation has been, completely disproportionate. So they needed to make the effort to de-escalate. And I believe after our, let's say, response on the 10th of May, on the morning of the 10th of May, when we were able to bomb 8 of their airfields and inflict severe damage, I think they realized that the game was up, and they went across and requested, a meeting of the DGMOs, and the rest is all known to us. And I think in that sense, it was a very strong message. I would say a combination of messaging, which involves